Welcome back, everyone. It has been a while. I don't know about you, but I've personally been very, very busy with a number of things, not the least of which being looking through more stocks than I can remember at any point in recent or distant history. Been looking through a lot of things and a lot of sectors that I don't normally focus on because prices are getting very interesting. But this video is about uranium and on the subject of the Cigar Lake shutdown. What are my thoughts? I've been getting many questions about that from many people, well, a few people. And so I thought I'd share my thoughts on that in this video. Uranium, are we there yet? So obviously the shutdown has been kind of on the table for a while, but hasn't really been directly addressed. I mean, Kazakhstan did say they may have to shut down, but Cameco didn't really address it beforehand. That said, with the coronavirus, it's not completely surprising. I have been, many people have been thinking about it for weeks and what it could mean. And I'll be honest, when I first thought about it, and when I heard about it recently, my initial thoughts were this market is broken, it doesn't work properly, so literally anything can happen. Well, not anything, but you never know. But I did think that the price wouldn't go up much initially if it went up at all. And I say this like knowing that it has went up $2 yesterday or $1.85 or whatever. So obviously on this subject, my initial thoughts are not spot on. I just feel like it's important to recognize that I'm not uh, right here or haven't been, it's not going according to my thoughts. Anyway, why did I think this? I think this because the market generally, if you've been watching it for the past few years, there's been a number of things that should be considered good news. Uh, Reactors coming online, reactor life extensions, uh, new builds starting. But every time it feels like there is some good demand news, the the price does not react, and um, the stocks, they sell off. So this market, it doesn't really care about a lot of things that will impact it at some point. It just seems to kind of get disappointed. So obviously this event is super bullish. I don't want to deny that, but I want to first start with a little thought on why it may not be time. And for the record, I hope it is, and it would be nice if the price would move soon because it's been a while. Okay, so Cigar Lake is 18 million pounds per year. They plan for a shutdown that's just under a month. Just under a month would give you 1.5 million pounds. So 1.5 million pounds isn't tons. And of course, the shutdown could be longer, but at present, we're talking 1.5 months. If you're Cameco in this situation, what would you do? Would you shut down the mine and surprise yourself? Or would you kind of plan ahead, maybe make a few purchases ahead of plan to kind of cover the added pounds that will be offline? I know what I'd do, but I mean, it would really be fun to surprise myself. I mean, if I could do that with regularity. Anyway, last time Cameco did shut down MacArthur, and last time the price did move up. But this is a bit different from last time in that last time they said they'd be in the spot market, and last time they implied that they wanted a higher price before restarting. This time they're implying that it's coming back online in a month. So the impact may be kind of limited from that. And this time the difference is 1.5, maybe 3 million pounds, and last time it was indefinite. So kind of tempering expectations here a bit. All that said, and all the tempering expectations and not expecting that the price would necessarily run now, all of that in consideration, I have to say that if front running takes over, then it's a different ball game. Everything changes because, if traders start front running Cameco, who needs to get their pounds before uh, they the end of the year, and then utilities step in, and everyone and hedge funds and whatever, everything starts kind of front running itself. This takes on a life of its own, and we can't really predict what happens. And this very possibly could be a catalyst for that. We never know. We kind of have to watch. Now, that said, yesterday when the price went up a buck 85, I'm not sure how much volume traded. I don't think I heard that there was very little, if no volume, but I haven't seen that, and that would be in line with what happened in late 2018, if memory serves, where the price just went up and up and up and up, and it was um, there wasn't much volume trading because it was uh, traders that had acquired some pounds and were waiting for Cameco to buy it from them at a higher price. And Cameco decided they didn't want to play that game. Again, this is why Cameco, I think this time, may have stepped in a bit earlier and may have planned ahead, and also why traders should be or might be a bit more hesitant to play that game against Cameco again. But the point is, we're starting to see the price move up, which means someone thinks this is pretty bullish, and it could realistically continue, and that would mean that my initial thought would be wrong. And I'm definitely not trading or taking any off of the table, because what I if I'm right, make a buck. If I'm right from beforehand, miss out on making a lot more than a buck. So I really don't see the appeal in either shorting or taking anything off the table at this time, especially because I don't really have strong conviction in this appeal or in this opinion, if you will, that this move was a mistake, because it's not. I'm just saying that the market is highly ineffective, highly broken, and it just, who knows what's going to happen. And I didn't think the market would react this way. So it has. We'll have to see if that continues. One thing that I wanted to point out, and it's a bit off topic, but remember, this industry has a lot of slack in the system and a lot of um, not inventory, but the producers do keep inventory. Kazatomprom keeps about half a year's of inventory on them. So if they had to shut down, that would could very easily be a delayed effect before they had to enter the spot market to get the missing pounds. And if they tried to enter the spot market to get the missing pounds, well, that would be problematic. Let's go with that. Um, but my point is simply that the deliveries are into contracts. Cameco keeps inventory. Now, they have significantly less inventory than they did at this point last year because A, they drew down more inventory last year, and they also delaying their purchases this year. So that's looking wise now. But there is inventory on hand all around the sector for times like this. That said, Cameco works on a rolling 12-month basis, means whatever inventory they use up now, they will have to replenish over the coming 12 months. And make no mistake, as much as I try to temper expectations here, and as much as my expectations have been very tempered in this situation, this is bullish. I was excited to hear about it in that it brings forward the day when uranium price does move justifiably by a month at least. And I mean, that's quantifiable, except that we're waiting on Godot. So, you know, how quantifiable is it that he's going to arrive an hour early? But my point is that, let's say the situation is, to use an analogy that I used with a few people when explaining, we're waiting for a tub to empty. And it's draining, but we can't really see how much water's left. We're in the dark. This just punched another drain in the tub, so it's draining twice as fast for a while until that gets patched. So we're moving forward at twice the pace, and if it's hugely positive, and if Kazakhstan joins the party, well, at that point, once that gets digested, I think that is very, very bullish. But again, it might not be digested overnight. Same thing with Cameco. It doesn't have to be digested. They don't need to go and buy 18 million pounds today. But anyways, if Kazakhstan shuts down, that's bringing it forward like what, 3 months for every month that passes, plus Cameco's 4 months. So we're talking. Well, we'll see how Kazakhstan manages the crisis. Hopefully for the people, hopefully they can not have spread, and we'll have to see what decisions get made there. But yeah, as bullish as it is, the time it gets digested over time, and so it might not show up in the prices immediately. While Cigar Lake shutting down definitely has a big splash type effect. Biggest operating mine in the world shutting down. Boom. The actual impact of this is, I just want to show it on a comparative scale, in that the Nuclear Fuel Working Group, rumor, and I've been waiting to do a video on this once it gets solidified for a while, and now I just don't care anymore. Not really. I mean, I care, but God, can they do it any slower? I don't know. Anyway, that if it's $150 million, that's 2 to 3 million pounds. This, let's say it's closed for a month and a half, 2 months, it would be 1.5 to 3 million pounds. So it's about the same effect as the Nuclear Fuel Working Group, and I do argue that in the grand scheme of things, the Nuclear Fuel Working Group is not a huge effect on the global market. For sure, it's big for Americans, but anyway, this is not about that. This is just saying that it's a similar impact to that, which is, many have argued, rather small. Also note that Uranium Participation Corp and Yellowcake are both trading at significant discounts to their net asset value. What does this mean? This means that they can profitably, and it is in their best interest, to sell some uranium to shrink their share count faster than it shrinks their net asset value. Meaning, let's say they had 10 million pounds, they're trading like they have 7. So if they sell 1 million pounds and buy back shares, they lock in a large return in terms of investment. So if they were to dump some of their pounds, this could offset one of these, well, some part of the shutdown. That said, will they? I don't know, but it makes sense for them. So we could also see some added supply, secondary supply, if you will, to the market. So remember, this is a moving thing that has impacts on either side. So if we ignore the actual effect for a second, ignore the number of physical pounds that get taken off the market due to this change, this can have a very effective, very notable symbolic effect to the market in that it means wow, Canadian can't even pronounce Canada. Okay, it means Canada has effectively no production. And well, actually, it kind of has no production, and North America even has very little, if any, production remaining. So utilities that are concerned about security of supply could look and say, wow, okay, this is a problem. So it could wake them up and light a torch under their contracting. Light a match, I guess is the saying, but torches work. Anyway, so psychologically, this may have a big wake-up call and may act as a catalyst to kind of, it could even say traders could be like, wow, oh, now there's probably definitely supply um, deficit, so maybe, whatever. So the point is, this could act as more than pounds being taken out of the market. This could work as a broad wake-up call. So that is an impact that can't be overlooked. So I thought I'd provide some thoughts on if the bottom's in, what's my plan, did it change, and so forth. So is the bottom in? Well, for the stocks, I thought it was in a while ago, was wrong because the market, well, I was wrong. So is the bottom in now? I don't know. Doesn't really matter too much for me as my plan has been scaling in over time. I think the price bottom is in. I think the price bottom was in a few years ago at 17, $18. So I never thought we were particularly going lower than that. I don't know how much that matters to anyone. The the strategy, as I mentioned, was to scale in over time. Obviously, at lower prices, you get more shares, and at lower prices, you can buy more. Dollar-wise, I mean, you could be more urgent. And that is basically what has changed here. The prices are lower because of I think it's just general market. Everything gets kind of dumped in this environment. So I think that's why they're lower recently. I also think that now there's a bit more urgency. You still don't have to pile in today. I mean, if it was bullish before, it's more bullish now, but really it's the same basic setup. We just have a month, maybe two less, and we'll see if anyone else has to shut in production temporarily. It could be coming at us faster than we planned. But as far as the value propositions out there and an entry point today, there's this sector, the entry point has definitely not been missed. You haven't missed it, even though some stocks are up significantly in the past few days. They're still down on the month. And if you look at the funds, the physical funds, they are trading at a 20, 25, 30% discount to their net asset value. And this is a net asset value that is physical uranium, of which the price, if us uranium bulls are correct, will be much, much higher in a few years. And you get the additional leverage of buying it at a discount, and then the price goes up and the discount closes, so you get more leverage. So as of right now, for an entry point for lower risk type thing, well, that's a pretty good risk reward appeal to me, especially because they have the opportunity to lock in some of their NAV and essentially buy uranium from themselves at a discount to the price of uranium. If you understand how selling uranium, physical uranium, and buying back shares would effectively work for them. So they have a bit of a downside cushion at this point, and upside, well, that just got better. So that's my thoughts on this. Well, that's all for today. Thanks everyone for watching. I hope you enjoyed, and I hope it's been a while. I hope you've all been well and healthy, and I hope you stay that way. And until next time, until this is all over, have a great day.